Dipen Sheth in the studios with us. Dipen, what do we talk about? Telecom? Is there anything to talk about? What's left? What's going to happen?
So I think on telecom, we don't have coverage on any of the telecom companies. We dropped it after we figured out that, it's impossible to figure out the way forward for many of these guys because...
But if it's a duopoly and it seems that that's the way it is headed, is there merit in investment in Bharti purely because their balance sheet looks like it's going to be able to absorb the HDR dues hit?
There are better excuses to find. There are better... candidates to find with serious investing, and I think the big trade in Bharti is probably played out. We don't have a formal view here. I don't see the telecom industry having sustainable pricing power or consumer franchise in the way that we used to think about 15 or 20 years ago. Okay, the penetration story is played out. The tariff cracks are have played out, and if I'm looking for sustainable ROCE in a stable business, there was a time when people used to look at telecom as being some kind of a utility business which would keep on giving you an annuity income. But there's been massive disruption, both technological disruption as well as the entry of Jio, of course, which has completely turned the tables on all these players, and they've been bleeding a slow death for a while. And the more leveraged ones like a Voda Idea, despite the merger and the alleged synergies, they've just bled themselves more and more, and you don't want to be in that space, especially when there's debt on the balance sheet and the residual equity value that flows through to shareholders becomes very volatile. And now with this AGR ruling and even Vodafone globally making noises about having pretty much at least in their minds written off, if not in their books. I think they've made some announcements in terms of even writing it off. So when a large global player says $15 billion has just gone down the drain, it doesn't look like a very inspiring moment to
What were these guys thinking when they invested 16,000 crore? Not once upon a time. This happened 3, 4, 5, 6, 7 months ago. The right issues were subscribed both by quality investors, long-only funds, best of the breed names, folks who understand telecom. It's not AGR. I mean, AGR is one part.
It's one part.
But Vodafone had become a 6 rupee stock before AGR. What were these folks thinking? What were the promoters thinking?
Okay, so you and I have the luxury of hindsight today, so let's be a little humble.
No, I'm just understanding.
Yeah. So the way I would interpret it, it's a fair question to ask. And what can we see and how do we read this? So I suspect what they were looking at was the bleedings over in terms of tariffs. It's now that tariffs should have bottomed out and should look up. So and the sensitivity to tariffs is obviously very high because it's a fixed cost industry.
Operating leverage will kick in.
So operating leverage will kick in, and it will kick in very strongly. The point is that that's just a hope, and if the lead player is not doing that, and if you're pretty much going to follow, I'm surprised that none of these guys have had the guts to say, okay, we don't mind losing market share, but we are going to hold our tariffs. Exactly. None of them have done that for donkey's years now. Had they done it very early and said, okay, I don't mind losing subscribers, I'll give you superior experience.
Quality.
I'll give you superior quality of service. They just were following someone who was disrupting based on a large stash of cash in the background. I think Jio's invested close to 3.5 lakh crores or some such number. Of course, much of that is now going to move off. The debt at least is going to move off their balance sheet and get into the parent balance sheet, but that's not the big deal. The big deal is that none of them were creative. None of them were aggressive. They were just followers in a market which was being disrupted. Okay, and I suspect the reason they were followers is that they were too used to being in a terribly and horribly regulated and babu-driven industry, where the pickings were very easy earlier on. We've seen a whole lot of telecom scams and scandals play out in the early 2000s. And then when things got tough and the industry got opened up, and nowhere did the quality of governance and policy mix around the industry improve. But they were just stuck in their own world for a long time. And when this question of putting in good money after bad, and that's what so many banks have also done when they've lent to the rogue lenders.
But when
you're not used to taking tough decisions. You've come from a culture where you've been spoon-fed or where you've had easy pickings.
In 2018, December 2018, it was the first time I heard Mr. Mittal going on record and said, look, it's okay if I'm not number one. I want to be a profitable enterprise. For the first 18-20 years of the existence, it was all about keeping their nose high that we are the largest company in terms of market share, and that has really costed everybody. I'm going to shift away from telecom, but stay with telecom indirectly. 2% of SBI's exposure is to Telecom. That's AAA rated. It's not an NPA. 3.5% of Yes Bank's exposure is in Telecom. Telecom is not an NPA on any of the bank's balance sheet.
Not yet.
Not yet.
But if it becomes an NPA on their balance sheet, what are we staring at?
Yeah, the domino effect that Telecom is going to have
So the domino effect on the financial industry or the lending or the banking industry is, of course, something that we should be wary of. And obviously, Telecom is not...
Where you're scared?
Yeah, so we need to get the specific details of the exposures. If you have a very high exposure to, let's say, right now, it looks like if you're exposed to Voda Idea as opposed to a Jio, then I think that's cause for stress. If you're exposed to Jio and anyway, much of that loan book is now going to move to the parent's balance sheet, then maybe you shouldn't be worried. So there are specific answers. There is a catch-all answer for the industry, but obviously there are specific answers. It's like asking, is corporate debt a bubble? It isn't, right? Not on Kotak Bank's books. But on some smaller banks, yes. So that's how to look at it. Obviously, we are helped by the fact here in terms of making the decision that there's maybe 3.5 players out there in telecom. So you can go out and understand what's happening. I think the banks are going to be very scared telling you who they've lent to. They'll just give you, so they'll just give you some number on this is our telecom exposure. Now, I don't know if lending to a Bharti group company or let's say a Voda Idea group company or one of the KM Birla group companies for giving them the liquidity to subscribe to the rights in Idea. Does that qualify as telecom lending or does that qualify as something else? So, there's a lot of details that one will have to find out, and till then we can only make ill-informed guesses, and I don't think that's the way to look at it.
Yeah. Wanted to understand, what is going to happen once the scrappage policy and the cabinet should hopefully take a decision on it, we understand, in the next 15 days. Because it seems that there is going to be a stringent, maybe tax or ruling for vehicles older than 15 years. Is this all really going to add up to the numbers and woes of the auto sector? I mean, people will be like, forget it. I'll just Uber and Ola it.
So on scrappage, I think the big deal, the big axe of scrappage will naturally fall more on the CV industry and not so much on passenger vehicles. Of course, there are old passenger vehicles and I'm all for owning older passenger vehicles. My own car is close to 10 years old now and I don't intend to scrap it in another 5 at least. Okay, but that's a different matter. I think on scrappage, the big deal is whether we will see a sensible scrappage policy that leads to elimination of those vehicles which are really, really polluting and inefficient. And does the incremental demand created through this policy lead to a sustainable uptick in CV sales? Now, there are 2 headwinds to CV sales. One is that old vehicles simply don't get scrapped until they kind of just come apart because they keep on going into more and more interior areas of the country, upcountry areas, where they continue to, ferry low priority or low sensitivity items for long after they should have been scrapped in any sane country. And I must confess that a whole lot of very interesting lending models are also built around that. Some of that at least, not all. So you look at a large book like Shriram Transport's used vehicle book. Now I think at least 20-25% of what they've lent, that's just a random guess I'm making, would probably qualify under the scrappage policy. But are you really in a position to be able to implement this? A basic thing like having third-party insurance drawn on every truck that is out there is so difficult to implement. If you're talking of trucks, just look at the kind of backlash you've got for when you've tried to put third-party insurance for 2-wheeler owners. So it's a very messy world out there as you go more and more upcountry, and to implement a scrappage policy across the length and breadth of this country, I think it's going to be very difficult. Okay, that's one. The second thing that we must confess or we must observe about the CV industry is that I think they are looking at 2 or 3 bad years outside of the scrappage policy boost should that come, for the simple reason that the dedicated freight corridor is going to get commissioned in phases, and as that capacity goes up, the big fat transport corridor between the twin metros of Delhi and Bombay, which feeds into export and import traffic of the country, is going to see a capacity ramp up, which comes at a much lower alternative pricing than road transport. If the railways get their act right, and we are actually very constructive on Concor for this reason. So I think there is going to be demand, supply creation there of an order, which is going to lead to HCVs and the heavier range of the
so Ashok Leyland?
So which is why people are not so gung-ho on Ashok Leyland. I also feel they are close to some kind of a sentimental bottom in their business. But I think the next 2 or 3 years of how the railway, the freight corridor commissioning affects the heavier vehicle demand from their range is going to be, very strongly watched out for. I think CVs are in for trouble. Scrappage or no scrappage. Yes, scrappage will help on sentiment. Again, implementation is going to be a problem, and fiscal headroom for the government is coming down with every passing day, as we well know. So I don't know how generous the government is going to be on this. I think we've been talking on scrappage for a decade now. Yeah. So there are bigger worries for the government, frankly. And if they do come up with something on scrappage, it will be sentimental more than material.
Okay. Just your thoughts on SBI's planned IPO for its credit card business. I know you're bullish on consumption, on personal credit. So, just your initial thoughts on the planned IPO.
So any bank that builds out a series of, subsidiaries or related businesses to the main core business of lending sets itself up for an SOTP value creation opportunity over the longer term. God knows SBI has built a great life insurance business. Okay. They have built what is clearly an admirably good cards business as well. There's SBI Caps as well, where there's talk of a tie-up with a foreign investment bank and eventually divesting some stake there. So this has happened. Interestingly, we have historical evidence of this having played out in phases with, let's say, another stressed bank like ICICI Bank, where the joke at one point of time was ICICI is good at everything except banking. And God knows they've built some very, very good quality businesses outside of banking as well. So whether it's life insurance, whether it's general insurance, whether it's their brokerage and so on and so forth. And of course, now the bank is rapidly on the mend. And look at the value creation that has happened. It's skirting with 500 when at 250 people weren't so gung-ho 2 or 3 years ago. Okay. So I think in SBI, this thing has to play out. Whether the IPO will happen now or not is a different matter. The value creation out of life insurance has happened. It will happen out of general insurance. It will happen out of the cards business, eventually out of brokerage, I suppose, as well. And this just creates a larger story around SBI over and above, again, like ICICI, the theory of healing of the asset quality in the mainline business, plus a very interesting chain of babies that you have, that you monetize over a period of time, add to SOTP, and in fact even raise some capital out of selling stakes there.
Yeah, SBI Life got them the big fillip for the quarter gone by. If I look at SBI versus ICICI Bank, they were joined to the hip at the beginning of the year.
Right.
They both moved up like a rising tide, more like twin brothers. Now there is a large difference. SBI is nowhere close to its 52-week high. ICICI Bank is mounting to a new high on a daily basis.
Right.
If someone has ICICI Bank, is it time to switch to State Bank of India, or you would say no, stay with ICICI Bank, don't look at SBI. Optically it may look cheap, but book is where the problem is.
Or even add more in ICICI Bank from a medium to long-term perspective.
So while we have buys on both of them, I think the faith in ICICI Bank, I must confess, despite the run-up and the relative run-up, is higher. And it's higher because we see sustained, build-out of the healing cycle playing out in a much more predictable way at ICICI Bank than at SBI. Having said that, SBI is alluringly cheap. I was listening to Sunil Singhania on your channel a few days ago on the big value trade, whether it's going to play out. If that big value trade does play out, then we have a winner in SBI. If people are still going to get choosy and picky about what they are buying, then I think the choice should be ICICI Bank.
But if we are in a slow for long kind of a growth scenario, slow for long, I think that's the global phenomenon, that's the Indian phenomenon. India was supposed to heal, it is not healing. Earnings was supposed to pick up. The grain of the truth here is that it's not picked up. festival season was supposed to be great. It has not turned out to be great. So while we are optimistic in this studio, I have to get realistic.
Slow for long
Slow
is
for
just
long.
the right phrase.
Just came to my mind right now. Slow for long.
Okay.
If you're in for slow for long kind of an world, do you think quality premium or the choice of stocks or choice of outperformance will be very limited and restricted? Whereas value is great, but that may not make money.
Yeah, so when you're slow for long, as you say, you can't be long on value blindly. Now, I don't think SBI is a low quality franchise by any stretch of imagination, but I would suspect that there could be a few accidents on asset quality even here on.
In ICICI Bank?
No,
SBI.
on SBI. Okay. Does that mean that it's not going to happen at ICICI Bank at all? No. But what do the current vibes tell me? The current vibes tell me that the healing cycle is easier, relatively easier to call in the case of ICICI Bank. It's reflected in the price, but you know what? If you want to play it safe, then you will go with ICICI Bank. And if you want to take a chance and say, okay, someday value will come back, if you're a 5-year investor,
it will.
then you would probably pick SBI. Okay.
Yeah. Okay, fairly simple and clear there. Always good to have you in the studio. Thank you so much for taking the time out. That's the word coming in from Dipen, Sheth. Interesting conversations there in individual sectors.